Thank you for joining us on Business Incorporated. I am Bisi Adebayo. Coming up on the show today, South African economy to shrink this year by more than 7% projected by government. Uganda and Tanzania sign agreement for construction of crude oil pipeline. Plus, world gold miners worry of production ramp-up despite price surge. Well, let's begin the show in earnest with intraday market numbers, which were mostly negative in Africa, except South Africa's GSE, which rose 0.13%. But here in Nigeria, the main index declined marginally by 0.05% due to declines from banking stocks. Egypt's EGX 30 also declined 0.05% at intraday. Kenya closed positive on Friday. And major markets in the Middle East were mixed at intraday. In the UAE, Dubai's main index rose 0.35%, while the Abu Dhabi index declined 0.11%. Elsewhere in the region, Saudi Arabia's main index added 0.19%, while the Qatari index shed 0.05%. Let's turn now to Europe, where stocks traded higher this morning, and that was boosted by the resumption of coronavirus vaccine trials. Chelsea Delany is standing by at the Frankfurt Stock Exchange to tell us more about how this is driving market sentiment this afternoon. Good afternoon, Chelsea. It's good to see you. So stocks in Asia stabilized after a two-week sell-off swept global markets. Are we looking at a recovery in Europe today as well?
That's really been the big question to kick off this trading week is this big sell-off we've seen over the past couple of weeks, is it finally over? It doesn't appear to be looking that way in Europe so far. We did have the DAX start up quite a bit higher, but throughout the day it's really given back all of those gains, and that's true of other European stocks as well. So clearly there's still a lot of anxiety and a lot of fear weighing on investors for now, hearing a lot of anxiety about the resumption of this Brexit fight, for example, but also just the continued uncertainty over the spread of the coronavirus, the outlook for a vaccine in the near future, and as well the growing uncertainty over the outcome of the election in the United States. So we had enjoyed a period of quite stable markets, but now all of these factors, all of these uncertain different stories are really starting to create a lot of volatility in markets. And investors say that even if we do see daily stabilizations, we likely will see more periods of volatility like we've seen over the past couple of weeks going forward.
All right, well, we'll wait to see how all that will play out. American software giant Oracle has won the bidding war for the U.S. operations of popular video app TikTok. Now, does this mean the future of TikTok is safe after U.S. President Trump threatened to ban the app?
Well, TikTok isn't in the clear yet. They are coming up on the deadline that President Trump had given TikTok's owner ByteDance to sell the U.S. operations. That deadline is scheduled for this weekend. And it's unclear if the deal that's been struck between TikTok and Oracle will really appease all of the concerns of the U.S. administration. What Oracle is essentially proposing is that they would be a technology partner for TikTok in the U.S. The main thrust of the idea is that they would oversee TikTok's data collection in the U.S. So they would likely be storing the data of U.S. users on their servers. That would eliminate the concern of the U.S. administration that TikTok and its Chinese owners could potentially use that data, could hand it over to the Chinese government. So that does sort of ease those concerns. But it's unclear if the Trump administration will take that as a win. President Trump, when signing his executive order threatening the ban, he had said that TikTok must be sold to a U.S. company. So it's this partnership would still have to be approved by the U.S. administration, and it's unclear yet if they find this deal good enough to really move forward with.
Now, Chelsea, let's talk a bit about Brexit. Now, of course, the fight has returned to British Parliament today, and businesses in both the UK and in Europe are sounding the alarm over economic consequences of a no-deal exit. Now, tell us, what kind of impacts could this have on European industries?
We've heard from several associations, several industry groups that this would be really devastating for trade between the two countries. A lot of businesses had been worried about a no-deal exit many times over these past 4 years of negotiations, but there was obviously a lot of hope that the UK and the EU would be able to strike some sort of trade agreement. Now that we're getting closer to the end of this transition period expiration, it's becoming a major risk for businesses again that they may leave the EU in this transition period without a deal. That would be really disastrous for many industries. We've heard particularly from the auto industry here in Europe, a group of industry associations has said that this could cost the auto industry about 110 billion euros in trade over the next couple of years, and that's including and that's as these companies are already really struggling with the fallout of the coronavirus and the shift to electric vehicles. So it's really a bad time for the auto industry to suddenly be facing the prospect of tariffs and things like customs hurdles, more bureaucracy between the two. So for businesses, it's quite crucial that they do strike a deal. But politically, this is still very much up in the air whether the UK and the EU will be able to find common ground.
All right, thank you, Chelsea. Do enjoy the rest of your day. Meanwhile, markets in the UK are up today as the FTSE 100 index has jumped 0.7% to its highest level in nearly 3 weeks. Juliana Olayinka has details of this and more. Good afternoon, Juliana. So we've seen the FTSE 100 up by 42 points this morning, with shares of IAG leading by 7%. Are the markets still holding up that positive momentum at this time, or has that changed?
It's changed, Bissy. The markets are pretty much firmly in the red at intraday, but it's worth giving you a bit of breaking news that we've got out of London. The first is that London City Airport have announced that they're cutting 239 jobs. This has just come in about an hour ago. They are in talks to do a restructuring deal, and 239 jobs will be going from there. Also as well, pretty interesting that the Labour leader, Sir Keir Starmer, the opposition leader, he has announced that he'll be going into self-isolation for 14 days because one member of his household has tested, well, they believe that they are showing symptoms of coronavirus. Now, they have gone for a test, but he will not be able to join the Prime Minister and the rest of the Labour Party in the House of Commons this evening for the debate, this controversial debate on the internal market bill. This is going to have serious ramifications for the Labour Party because, of course, Sir Keir Starmer is the leader and he's a pretty strong force against Boris Johnson, so somebody will have to stand in for him. He won't be able to do it remotely because he is a front bencher and the House of Commons leader doesn't allow front benchers to speak remotely. Also as well, we've had a resignation from a Tory MP, Reham Christie. He was the special envoy for freedom of religion and ideas. He's resigned over this internal market bill. Just worth mentioning them before I go into the numbers. The all-share is down 0.07%. The FTSE 100 is down 0.22%. And the FTSE 250 is just slightly up by 0.40%. On the currencies market, the pound is up on the US dollar by 0.61%, up on the euro by 0.37%, and up on the Japanese yen by 0.42%. Lots of worries by traders in London about the change of the corporate landscape in the US, Britain and China. There's that TikTok Oracle deal, and of course the fact that this British company, the chip designer Arm Holdings, has been purchased by Nvidia, the US, for $40 billion.
All right, Juliana, let's talk more about the internal market bill, which you just spoke about. Of course, we've seen David Cameron, who has become the 5th former Prime Minister to criticize the new bill attempting to override the Brexit withdrawal agreement. What are the former Prime Minister's views of the bill?
Well, the proposed legislation is causing a storm, not just in Brussels, but in Westminster. As you said, David Cameron is the fifth Prime Minister, the fourth Tory leader to condemn the proposed legislation. Britain is saying it's important that they get this through Parliament because they want to avoid a border down the Irish Sea, because Northern Ireland would have to adhere to some EU regulations if, well, depending on what the deal is between Brussels and Downing Street. It's worth mentioning what David Cameron did say to reporters this morning. He said passing an act of Parliament and then going on to break an international treaty obligation is the very, very last thing you should contemplate. It should be an absolute final resort. So I do have misgivings about what's being proposed. It's important, again, that I mention the next statement, because this has not really been picked up by media. He said, however, so far what's happened is the government has proposed a law that might pass or might not pass, or might use or might not use, depending on whether certain circumstances do or do not appear. So really what he is saying is calm down. We don't even know whether or not this is going to get into law at the moment. I've got to say, David Cameron's sentiments were much lighter than the sentiments from Sir John Major and Theresa May, former Conservative Prime Ministers.
All right, Juliana. Of course, now, today is Monday, and that's when restrictions banning social gatherings of more than 6 people, both indoors and outdoors, in England and Scotland have come into effect. How is it playing out on the bus, the trains, and even restaurants? You've been out, so you can tell us what you've observed.
Well, these restrictions don't, these are social restrictions, so they don't adhere to TfL or any bus or transport network. The government will presume that anybody using transport will be adhering to social distancing measures, or at least wearing a mask where they're unable to do so. The same goes into the workplace as well. Workplaces should by now be using COVID-19 measures, so it doesn't apply there. It's the social aspect that's the main concern, and this is because the rate of infections across the UK has been rising. We're seeing numbers every day that we haven't seen since May, where we were just past the peak. I believe that, well, it's a fact here in this country that the reason why it's rising has been blamed on young people, and we know that it's young people that are spreading the COVID because of the test, trace, contact system. So there are a lot of pubs and bars that are tracing it back to people of a certain age group, and it's particularly of a concern because universities are just starting right now. I was at university a few years ago. There is something called Freshers' Week, which is really popular here in the UK. A lot of young people go down to pubs and bars and socialise with themselves, and the government are asking people not to do that in bubbles of more than 6. This doesn't include children under the age of 11, and the Home Secretary, Priti Patel, has been pretty strict in saying that if you do break these rules, not only will you get a criminal record, but you will be fined thousands of pounds. And of course, you'll also be part of the reason why COVID is increasing in this country.
At the end of the day, what's most important is that everyone stays safe this period. Thank you, Juliana. We'll see you tomorrow. And then in Asia, stocks rose today with investors watching shares of Japanese conglomerate SoftBank Group following an announcement of its sale of UK chip designer Arm. South Korea's Kospi jumped 1.3% on the day to 2,427.9. In Japan, the Nikkei 225 rose 0.65%, closing at 23,559.3, while the Topix index added 0.88% to end its trading day at 1,651.1. Well, mainland Chinese stocks were higher by their close, with the Shanghai Composite up 0.57% to about 3,278.8, while the Shenzhen Component also added 0.61% to around 13,021.99. Hong Kong's Hang Seng Index rose 0.77% as at its final hour of trading. In Australia, the S&P ASX 200 edged about 0.68%. Shares of Macquarie Group, however, dropped more than 4% after the firm announced on Monday that it anticipated a 35% plunge in its first half earnings. In the U.S., stock futures rose early this morning, and that came after a sell-off in tech shares led to the market's first back-to-back weekly declines in months. The Dow Jones Industrial Average futures traded 306 points higher, and the S&P 500 and the Nasdaq 100 futures were also in positive territory. Sentiment was lifted in part by news of Nvidia buying chipmaker ARM Holdings from SoftBank for $40 billion. We'll be taking a look at South Africa's economy when we return in just a moment. Please stay with us. Welcome back. The world's top gold miners are retrenching after COVID-19 related shutdowns, despite record prices for the yellow metal, with cost-conscious executives prioritizing investor returns over production growth. Gold prices have jumped 30% this year to roughly $2,000 an ounce, which has fueled a cash surge for miners, with top and mid-tier producers holding roughly $5 billion in cash as of June the 30th, 2020. But miners are hesitant to spend on pricey projects and tap marginal deposits that require sizable capital and take years to break even. And talking about prices of gold now, they were actually higher earlier today, and that was supported by a weaker dollar and expectations that the U.S. Federal Reserve will adopt a dovish stance at its two-day monetary policy meeting later this week. Spot gold rose 0.3% to 1,946.66 per ounce, while U.S. gold futures rose 0.3% to $1,954,60 an ounce. Elsewhere, silver gained 0.2% to $26.80 an ounce, and platinum jumped 1.3% at $936.74 an ounce, and palladium fell 0.3% to $2,313,095 an ounce. Uganda and Tanzania have signed an agreement paving the way for the construction of a crude oil pipeline running from Ugandan oil fields to the Tanzanian port of Tanga. The agreement on the pipeline construction comes days after French oil giant Total said it had reached an agreement with Uganda protecting its rights and obligations in the pipeline's construction and operation, known as the Host Government Agreement. When completed, Tanzania will earn 7.5 trillion shillings and create more than 18,000 jobs over the next 25 years. Uganda has not given a date for when the construction of the pipeline will begin, but says that it will take between 2.5 to 3 years to complete. Well, let's turn now to South Africa, where the finance minister says that the economy is projected to contract this year by more than 7%, earlier forecast by the Treasury. In July, the Reserve Bank cut its 2020 forecast for GDP to 7.3% contraction. Last week, Statistics South Africa released GDP numbers for the second quarter of 2020, showing that the economy shrunk by 51.0%. Well, joining me now to talk about what this means for the South African economy is Matt Kindiger, a senior analyst for Sub-Saharan Africa at Ducker Frontier in London. Good afternoon, Matt. Thanks for joining us on the program. Well, given the scale of the contraction of the economy in the second quarter, and of course the fact that coronavirus cases are now rising again across many countries, what does this mean for South Africa's economic outlook?
Thank you for having me on the program today. Yes, so the economic data that's out of is quite sobering. We saw the economy on a year-on-year basis about 17.6%. That's agriculture, but one of the peak and also one of the longest. We've seen investments in the sector.
We'll get back to Matt in just a moment. We need to fix some of those audio issues there. But for now, let's talk about oil prices. They rose in early trade today as a tropical storm in the Gulf of Mexico forced companies to evacuate rigs and halt production. But we saw gains kept in check by wider concerns about excess supply and falling fuel demand. US WTI futures were up 0.5% at $37.51 a barrel, while Brent crude gained 0.2% at $39.92 a barrel. Both contracts ended last week lower, and that's a second consecutive week of declines. All right, Matt Kinniger is back with us to continue the conversation, talking about South Africa's economy. Matt, go ahead.
Hi, sorry, yes. So what I was saying was that the South African economy has one of its worst records began, and now faces one of its strongest recessions since 1992. In terms of how we see the economy for the next year or so, we are expecting it to be by around about here. We are expecting recovery and growth from 2021. But this will be really quite a weak recovery, and this is because the economy faces a number of issues, especially around difficulties with the tourism sector recovering, but also issues around weak public finances as well as electricity shortages. And so we really don't see the economy returning to its pre-pandemic levels until 2023 in terms of its size.
Well, then, we've seen significant volatility in the rand this year. Given how open the South African economy is, how have businesses been affected by this, and what can they expect from movements in the currency through 2021?
Yeah, so the rand lost approximately 30% of its value from the beginning of February to the end of March against the US dollar. And this has mainly been a result of investors taking their money out of emerging market countries. And the South African rand is one of the most widely traded emerging market currencies. But subsequently, the rand has made up most of those losses, and this is a result of a sort of stabilization of the global economy. However, going ahead, we are expecting the rand to continue to exhibit some volatility, although in 2021, the currency is likely to stabilize and potentially appreciate somewhat. And this is because exports will continue to improve next year. The global economy will continue to stabilize. And things generally will be looking a little bit more upbeat for South Africa, although, as I mentioned earlier, not quite as good as they were before 2019. In terms of how businesses are being affected, so this year has really been a difficult year for businesses in terms of planning for currency volatility. Many companies have been subject to forex losses. But the good news is that the rand should be more stable in 2021.
Senior analyst SSA at Docker Frontier in London, Matt Kinniger, thanks for sharing your thoughts with us this afternoon.
Thanks.
And that's where we end today's program. Thank you for watching. I am Bisi Adebayo.